Welcome to the Coin Stories podcast, where we talk about investing, hard money, Bitcoin, and how technology is revolutionizing the global economy. I'm Natalie Brunell, and I'm here to learn with you. So this is for educational and entertainment purposes only. None of the discussions should constitute as official investment advice, and you should always do your own research. This show is made possible through partnerships with companies I trust, and I'm very picky about who I partner with. So I hope you take the time to listen to the ad reads throughout the show. First up, Swan. I partnered with Swan because it is a Bitcoin-only company that is focused on helping people save for their future and self-custody their Bitcoin. Swan can help you start a direct deposit to take advantage of Bitcoin as a savings technology and learn how to take it off the exchange. Swan's mission is to educate 10 million future Bitcoiners through free resources and media projects like the Hard Money Show. Swan also offers retirement planning with an IRA, tax loss harvesting, and a white glove private client service. I use Swan to dollar cost average, and I deposit a little bit every day that's equivalent to what I might spend on a meal so that I add to my future nest egg and lower my yearly cost basis. Swan Studios produces my hard money news reports, simplifying Bitcoin for mass audiences and documenting Bitcoin adoption around the world. To learn more and get $10 in free Bitcoin, head to swanbitcoin.com/Natalie Brunell. All right, next up, Bitcoin Conference 2024. The world's largest Bitcoin event is headed to Nashville next year. Early bird tickets are now available, and this is the lowest cost you'll be able to secure for the conference all year. And if you use the code HODL, HODL, you'll get an extra 10% off. So come join us for 3 great days of networking events, panels, keynotes, workshops, and more. You never know what big name might be announced when tickets are much, much higher in price. Head to b.tc/conference and use the code HODL. I'll see you there. Welcome back, guys. You've probably heard it in the news. One company after another filing applications for Spot Bitcoin ETFs. This could bring a lot of institutional and retail adoption. So to help break it all down, we have James Seyffart. He is a research analyst at Bloomberg Intelligence. James, thanks so much for joining me.
Hi, Natalie. Thanks for having me.
All right, let's zoom out, because a lot of people that are probably watching this have heard the headlines. Maybe they've seen you on some of the other shows. What is happening with all of these companies? Why are they filing for these spot Bitcoin ETFs right now?
Yeah, so right now is a good question. We're not really certain why BlackRock filed right now. There's a lot of theories that I can throw out there, conspiracy theories. But the reason that everyone else has followed suit is because BlackRock filed. And essentially, it's a first mover advantage, right? If you can get to market first, then you're the first ETF. Everyone buys yours first, trades yours first, puts money there. It's just you want to be first to market because then you become the name that got the first spot Bitcoin ETF. And more assets means more fees for those companies. But if you can't be first, you don't want to be too far behind, right? Like if you can launch and then if BlackRock gets approved, which is definitely not guaranteed, I want to make that very clear. It's not guaranteed that BlackRock is going to get an approval from the SEC. But if BlackRock's going to get approved and you're an issuer that's trying to launch these things and has been trying to launch these things, you don't want to be you want to be as close behind as possible, whether it's a day, a couple days. You don't want to wait a month. So everyone else is filing and basically getting in line and saying they also are ready to launch spot Bitcoin ETFs when there's approval. So that way they're a couple days behind.
I know that BlackRock is sort of a household name, especially if you follow Wall Street. But for those folks out there who maybe don't have that sort of financial background, can you talk about the importance? What is BlackRock in terms of this space, and why would they want a spot Bitcoin ETF?
Yeah, so BlackRock is it's the gorilla in the room for the asset management space. Anyone who manages money on Wall Street, BlackRock has, I don't know what the exact number is. I want to say like 12 trillion. They are the largest ETF issuer in the US, so they make up 33% of the US ETF market. Vanguard is second behind them in both categories, I believe, with just asset management and ETFs. So they're close behind, but those two are the big, like King Kong and Godzilla in the asset management space, essentially. So for them to take a swing at this or take a shot at launching a spot Bitcoin ETF means they're very serious. It shows that TradFi or traditional finance companies have not shied away from crypto or Bitcoin. So it shows that there's still interest there. And yeah, so that's why BlackRock is important. If any other issuer had filed for this, the stories wouldn't be the same. We might not have even seen other issuers file. 21 Shares is an ETF issuer in Europe. They partner with ARK Investments, which is another ETF issuer here in the US, to file back in May. So it's not like no one's filed in a while. It's just that the BlackRock name and some of the changes they made to their applications is a big deal and everyone else is following suit, thinking that BlackRock knows something potentially. And it could be related to Grayscale, which operates a Bitcoin trust, and there's a lot of issues and lawsuits going around that. Looks like Grayscale might win a lawsuit against the SEC. There's a lot of other things going on that might signify why BlackRock is doing this application, but they think, obviously, whatever the odds are, that BlackRock thinks that they're going to get approval for this ETF. Even if the odds are stacked against them, as I mentioned, if you can be a first mover advantage, right? If you can get the first one out the door, even if your odds of approval are low, 10%, 20%, whatever BlackRock may have pegged those odds at, if they can get first out the door, the benefits vastly outweigh any cost for filing and dealing with the SEC's negative repercussions.
Well, I know in your role, you look at ETFs very, very closely. Can you explain what exactly is an ETF and what would it do for the Bitcoin space if a spot Bitcoin ETF was approved? Because we already do have futures, but we don't have that spot.
Yeah. So what is an ETF, right? So an ETF, they were invented in the early 90s, essentially is what it comes down to, by a guy named Nate Mose. And the way to think about them is they were kind of based off this theory of commodities warehouses. So these had always existed for a long time. And essentially, it's almost like a vault. You could think of it as a vault or what have you. And you would deliver gold to this vault, right? And the gold, you would get these pieces of paper back that says you have XYZ bars of gold. And then you could trade those pieces of paper rather than physically trading the gold. You could do it with any commodity. You could do it with wheat or corn or what have you. That's what commodities warehouse receipts are. So ETFs are kind of based on that process. The whole idea is that with an ETF, specifically a Bitcoin ETF, is that you would basically hand over that Bitcoin, and that Bitcoin would be stored in a vault, or in this case, like a cold wallet. And then those shares of the ETF, which trade on exchange, are what you would use to trade rather than trading the actual Bitcoin. And the benefit here is it brings Bitcoin on its traditional financial rails in what, in my opinion, is the most efficient vehicle to do it. So the main thing with an ETF is, first of all, you can do the same thing with equities, with bonds. Instead of like one individual security, you have a recipe to make those shares of the ETF. So you can always, at any point with an ETF, do a creation or redemption. A creation means you're creating shares. A redemption means you're destroying shares. When you're creating shares, you would do something like hand over Bitcoin and get back a certain pro rata amount of the ETF shares, right? So you hand over Bitcoin, get shares of the ETF. A redemption would be, okay, here's my 40,000, 50,000 shares of the ETF, or 10,000, whatever it may be. Give me back my pro rata share of Bitcoin. Mm-hmm. And that process is called the creation redemption process. And what my boss, Eric Balchunas, likes to call it is, it's like the flux capacitor from Back to the Future. Like, it's what makes ETFs work and super efficient. I mentioned Grayscale before. The GBTC trust, I don't know if you've covered it on your show, but yes, it's trading at a massive discount. And the problem is it doesn't have that creation redemption mechanism, right? So the way that creation redemption mechanism works is, if you think about a stock or anything you're trading or trying to value, the way the price changes is the supply is usually relatively fixed. And as demand goes up or down, price goes up or down. The benefit of the ETF mechanism, where you can constantly create shares or redeem shares on any given daily basis, is you can move supply to meet demand.
Right.
And what that means is the price of the ETF shares are always going to be matching the value of the underlying Bitcoin, which is not happening in GBTC. If GBTC were an ETF, we would have seen a bunch of outflows, and the price would have the price would have gone up to meet the NAV, because people would have done that creation redemption mechanism, which allows for what's called arbitrage. Essentially, at all times, the NAV and price should be relatively equal, absent like trading and frictional costs of doing that. Right. So basically, NAV and price, the value of the shares, the value of the underlying asset, in this case, Bitcoin, will always be very, very close.
You did such a good job explaining that. And I know that a lot of my viewers and listeners, they might be owning GBTC. And at one time, there was a massive premium. So there was that arbitrage trade that people have heard about with some of the exchanges that have since gone under. Now it's been trading at a massive, massive discount. And I was trying to really understand that process of how you match the underlying assets value. So if you have, let's say, 100 Bitcoin in the vault and each Bitcoin is trading at $30,000, that's $3 million. So all the shares have to be worth that $3 million, right? Otherwise, you can sell, you can redeem, you can buy back. Is that essentially how it works, and the benefits of something like this compared to the GBTC or the Grayscale Trust?
Yeah, exactly. So exactly, your description is spot on. So basically, those shares always have to be worth, however many shares out have to be worth as much Bitcoin as held in there. So when you look at Grayscale, the price is worth way less than what the underlying Bitcoin is worth because there's no mechanism to access that underlying Bitcoin right now. So when there is a mechanism to do that, which theoretically, if we get an ETF approval, GBTC would then convert. The one thing I do want to note is GBTC, this is going to get too in the weeds maybe a little bit, but it's structured as what's called a grantor trust. And that's what all these other filings for these ETFs are. They're also structured as grantor trust. So people tend to think of ETFs as one specific thing, but they have all these underlying different structures. And what it basically just means is that GBTC wants to become an ETF. You can think of ETF as more of a piece of technology, a wrapper around something. In this case, it's a trust that's going to hold the Bitcoin. And in that trust, theoretically, you'll have cold wallets that Coinbase for iShare for BlackRock and iShares' application. Gemini is also used as a custodian. They'll store stuff in cold storage. So basically, these third parties would hold the Bitcoin, and you always, it's trust law in the US. It's very concrete. You're not going to have the issues that you've had with FTX, that you've had with countless of other exchanges. This is real strong American US law that says basically, if you own shares of this ETF, you own a pro rata share of this Bitcoin that's being held there. And it's not going to be the same situation where you had tons of paper Bitcoin, tons of moving around of capital and Bitcoin on the back end, like we saw with FTX, or at least alleged moving around. But I think we'll just stay there. I'll say alleged.
No, that's absolutely true. You also mentioned that you think that Grayscale might actually win its lawsuit against the SEC. Would that mean that it could potentially also convert to a spot Bitcoin ETF? Is it possible that we might see just one after another actually be approved in, say, the next year?
Yeah, so there's a few things to unpack here. So yes, we think Grayscale is going to win their lawsuit. We've been saying that since the oral arguments came out a few months ago. Basically, they filed a lawsuit and then they go into court before this panel of 3 judges. And going in, a lot of people, I don't know if you remember this, a lot of people are like, this is a frivolous lawsuit. And one thing our litigation analyst, so I work with a bunch of other analysts covering different areas. Our litigation analyst was like, they have a real shot here. He pegged their odds of winning at like 40% if he had to pick one, right? So
and
it
then
wasn't
70,
0,
right? Yeah.
And now we're up at 70.
Yeah.
So it's looking, and the more you look at everything, the more you read it over, it looks like Grayscale is going to win. Now, oral arguments aren't everything. Like they could have just been asking those questions, and the judges are actually going to deny or say Grayscale isn't right. But we think they're going to approve, or they're going to side with Grayscale and basically send the decision back to the SEC to either approve or deny, again for different reasons. So that also might be a reason why BlackRock is filing. So part of it is, does BlackRock know something that nobody else knows? They have insights? I mean, when you're that large and that tied into what's going on, you might have more insight than other smaller upstart issuers. But even if they don't, maybe they're seeing the writing on the wall. They also think Grayscale is going to win this, and they want to make sure their hat is in the ring. So that's one theory. The other theory is Gary Gensler is the head of the SEC. He's a politician. He probably doesn't want to take a loss here. So if you can get whispered to BlackRock potentially, this is conspiracy theory here. Now this is no longer factual basis. But like if BlackRock finds a way to get what we didn't really talk about what made BlackRock different. But if you can find a way to get like an ETF approved before you get a decision in the Grayscale case, that might be beneficial to Gary and the SEC.
Well, let's talk about that. What makes BlackRock's application different? And if you look at the track record, you mentioned before, BlackRock has 33% of the ETFs, and their approval is what, 500 something and 1 rejection?
Yeah, so there are 575 and 1 at least that takes into account like all the ETFs they've ever launched, including the ones they've thus like closed or liquidated, and they've only been denied once. And subsequent that application, basically, they were applying for a certain way to structure an ETF. The SEC denied it, but the SEC has since come around, and now those types of ETFs are called non-transparent ETFs are there. So they were early, not wrong essentially in that one. But yeah, we have 30 something spot crypto ETF applications that have been denied. I think 33, maybe more, that have been denied by the SEC. So the SEC is very well acquainted with writing denial letters for these things. And over the past decade, they've changed like what their reasoning is, right? They've narrowed it down. The issuers have solved questions the SEC has had. They've done all these different things. The one thing that's still left hanging on the table right now is the SEC doesn't want to approve a spot Bitcoin market ETF until they have oversight of an underlying spot market, whether that's an exchange comes in and registers with the SEC, which really isn't possible right now because there's a lot of questions about what's a security, what isn't.
Right.
really, there's no way for an exchange to register. So the other way that they said, Grayscale got denied last year, and in their denial letter, it was like over 100 pages, and 80 something times it said the word surveillance sharing agreement. So either they want a spot market to come in and be regulated with the SEC or CFTC or some other regulator, or they want a surveillance sharing agreement with an underlying market of significant size. That's their exact terms. They want somebody who's a meaningful player in the market, somebody who's trading a significant portion of the Bitcoin, and they want a surveillance sharing agreement. And a surveillance sharing agreement just basically means like, we will give you all of the trading data on our system so the SEC can go back and see if there's any manipulative practices. This person's trading here and wash trading, doing all these like technical things that are illegal in trading world. So they basically just want to have oversight and able to be the ability to go in and really figure out what was happening in these spot markets. There's a lot of evidence that says like just having the CME futures and the current stuff would have been good enough, but the BlackRock filing, what made a difference was this surveillance sharing agreement. They say they don't name the exchange or the spot exchange that they're going to use, but there's a surveillance sharing agreement between NASDAQ and this spot exchange for BlackRock's application. So NASDAQ is the exchange that filed with the SEC. They're regulated under the SEC. So if they have a surveillance sharing agreement with the spot market, then theoretically that could satisfy the SEC's concerns, because then the SEC has access to that surveillance sharing agreement, that data from there. But the question is that spot market a market of significant size? And they don't name the exact exchange in their application for a rule change to launch these ETFs, but one can assume, and we are assuming, that it's Coinbase, just because Coinbase is their custodian. BlackRock has a bunch of partnerships with Coinbase already, so it just makes sense that that's who it would be. And they're a pretty large piece of the pie here, but obviously Binance right now is, if you look at any other source, they're like 50 to 60% of the market. So there's questions about whether or not Coinbase would meet the criteria of market of significant size.
It would be interesting, though, seeing as the SEC just recently filed a lawsuit against Coinbase as well. But can you break down a little bit more that question of whether market manipulation is actually happening? And essentially, is BlackRock, they have a technology that can detect if there's market manipulation happening, or how do you explain that a little bit more simply?
Yeah, so it's not that they have a technology. It's basically if something happens and the SEC gets wind of it or gets a tip, they want to be able to go in and look at the trading history and be like, every single tick, every single trade, these were bid and offers that were put in to trade Bitcoin. They want to be able to see an exchange that has that data, so they can go in and find like what happened here. Was there manipulation? Was there fraud? What have you? That's the whole point of it. They want to be able to figure it out.
Is there a privacy concern with that? It's time for a quick break to hear these messages from my partners. First up, how would you like to earn 100,000 Satoshis? Well, here is your chance. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to groceries to your Bitcoin conference tickets, with Fold's Bitcoin cashback debit card. And you can win free Satoshis every day, or even play for a whole Bitcoin by spinning the rewards wheel. You can also buy Bitcoin and stack sats directly on Fold and earn even more incentives and rewards. This is a great app to get someone totally new into Bitcoin, and way better than earning airline miles or hotel points. Head to foldapp.com/Natalie, and if you use my link, you'll get 100,000 sats when you sign up for Spin or Spin Plus and spend at least $20 on the card. Is there a privacy concern with that?
Potentially, yeah. But if you're trading on Coinbase, basically the SEC theoretically could go in, or the CFTC in this case could go in and like figure out like if you're doing some false or illegal things. But honestly, to be quite clear, like Coinbase wouldn't let you do most of these things. There's a lot of like preventative measures that Coinbase and other exchanges theoretically have. But you mentioned the lawsuits. Binance is being sued essentially for not stopping any of these types of illegal trading that aren't allowed. So Coinbase is not being sued for any of that. They're both being sued, but Binance is being accused of other manipulative practices like wash trading and all these other things that you can do that are technically illegal. Basically, yeah, I'll just stop there.
Well, this is an asset that is global and borderless, trades 24 hours a day. So how can you really prevent market manipulation? Would these tools, would this type of exchange surveillance agreement be good enough?
Yeah. So theoretically, right, they would be able to go in and see if there was manipulative practices going on, and then they could go after who is potentially doing it, would be the ultimate goal. Obviously, Bitcoin is a global market. Part of the reason you mentioned they approve futures ETFs, which are different, they're derivatives. So basically futures, they're monthly contracts. So you would go and you buy one, then you'd have to sell the current month and buy the next month to maintain your exposure to Bitcoin. CME is a regulated market, which launches the futures, Chicago Mercantile Exchange. So that's where those futures ETFs are. And what the SEC basically said was to convince the market of significant size aspect of their requirements, they basically said CME is the only market. So therefore, it's a market of significant size, even though there's plenty of other Bitcoin futures products around the world. So that's why I said it depends how you define the market. So if you look at Coinbase, you look at US dollar trading for Bitcoin, Coinbase is the largest. When you look at Binance, it's almost all USDT, USDC, and other stable coins and other pairs with Bitcoin.
Got it. Okay, so is BlackRock essentially first in line? Because you did mention earlier that first mover advantage, because there have been all these applications before that were denied. So does the line start over, and is BlackRock number one?
Yeah, so right now BlackRock is number one, but there's two different types of filings here. So when you file for any fund, you have to file what's called a prospectus, and it basically says, here's the fund, this is all the information you need to know about, ticker, where it's trading, how much does it cost, this is our custodian, these are all these other third-party administrators we're using, these are the risks. It's just this massive file. It's basically they're covering their own asses and making sure they disclose any potential risks and explaining exactly what the fund is doing. That's what some of these filings are. BlackRock filed one of those. That was when the headlines first hit. But they also, for these specific ETFs, because of the way that they're structured, they have to go through this process called the 19B4 process, which is basically applying for a rule change. So the SEC, these issuers need to partner with an exchange and then apply to the SEC and say, we want to change the rules to allow a spot Bitcoin ETF. And this process has a strict timeline. So there's a specific number of days. It goes, basically you would apply, they post on the exchange website. In BlackRock's case, it's NASDAQ in partnership with BlackRock that is filing with the SEC to launch these things. And basically NASDAQ posts the application and sends it to the SEC. Then the SEC basically has to accept it, post it to the register. And then there's all these different things that happen. But basically you go 45 days and then the SEC has a deadline of approve, delay, deny. 45 days, same thing, 90 days, same thing, and then 60 days, which you get to 240 at the end. So once this thing hits the SEC register, is when we find out like what the timeline is actually going to look like. But it could take anywhere from a week to 2 weeks after we saw the filing. So we're coming up on a week after BlackRock first filed. So we'll be watching closely tomorrow, today, and next week to see when it actually hits to get a real timeline of what we're looking at here.
Well, I think that the people at BlackRock know something. And when you look deeply into these firms, there's sort of a revolving door, right? This person used to work at the SEC or the CFTC. Now they're at this firm or vice versa. So there's got to be something going on. What do you think the chances are of, at least in the first 45 days, it getting approved? And I'm going to guess no. But do you think ultimately it will be approved?
Very good question. So I'm going to give you a different answer than you'd expect. So one, I will say that based on the historical analysis of the SEC and everything they've said, they should probably disapprove this or deny it. But all those reasons you just said, the revolving door, a lot of connections are all true. So that's part of the reasons why we're more bullish on approval than most other people in our space. So me and my colleague, Eric Balchunas, we're pegging the odds around 50-50 at this point because we just can't imagine BlackRock not knowing something. And this whole surveillance sharing agreement adds a little bit to it. Now, timeline. Basically, if you've been following on Twitter or anything, there's all these filings that have happened in the past. And typically there's always a delay, and every 45-day delay, 45-day delay, and then 90 days later they delay. And then after 60 days, they deny. It's very rare that they would delay and then approve, but it does happen, but it's with other things. But in my view is that if they're going to approve it, they're probably going to approve it by the first deadline. So if they delay on that first deadline or before that first deadline, that's a bad sign that it's more likely that they're going to deny these things. Now, that said, I mentioned that ARK and 21 Shares had filed in May, and their first 45-day deadline was due up on June 29th. Ironically, the SEC went early, 14 days early on June 15th, and issued a delay order. So now we're waiting for another response from them in August, I think it is. So this BlackRock filing, like I said, we don't know the exact timing. My guess is somewhere around August 19th would be the deadline for an SEC decision. But as I said, with ARK and 21 shares, they went 2 weeks early. So it's a deadline. It's not that they have to wait to that end. Usually they do tend to get closer to that 45-day period. But if you my guess is somewhere around mid-August is when we would get a response from the SEC on this BlackRock application. And like I said, if they delay, that's a bad sign, not a complete instance that they're definitely going to disapprove or deny. But if they delay, it's a bad sign. So we think if it's going to get approved, it's likely to get approved right off the bat. And that also squares nicely with what's going on at Grayscale, because we expect a decision likely in Grayscale's favor, in our opinion, before the end of the third quarter. So before September 30th.
Wow.
So all of a sudden, if this thing gets approved in August, then almost the Grayscale application and lawsuit is almost borderline irrelevant, because they've now approved spot Bitcoin ETFs, and then GBTC can convert to an ETF.
Wow. I mean, that would be crazy. What do you expect to happen to Bitcoin's price if they were approved?
Well, I mean, Bitcoin has already gone up on a bull price. So I on a bull run after this BlackRock announcement, there's a lot of hype around here. Like I said, we think there's a decent chance that it can get approval just because it's BlackRock and for some of those other reasons I mentioned. But Bitcoin futures ETFs, they marked the top in 2021. But granted, part of the problem was that was at the height of a bull run, right? Like that was up Bitcoin was around $60,000 when those things launched, and they literally marked the top. When CME futures launched in 2018, they basically marked the top in Bitcoin then too. But right now we're in a different part of the cycle, a different part of the market. We're not quite in that immense euphoric bull run and launching at the top. So I don't really know, but that Bitcoin futures ETF took in $1.5 billion in 2 days. That's a record. It's the first time that any ETF has gone to $1 billion in 2 days. The prior record was from a gold ETF, which is fairly similar. It's also a trust, would operate very similar to these things, but it did it back in 2003, I think. So $1 billion back then is worth a lot more than $1 billion today, as you and your listeners will quite know, with inflation and how the benefits of Bitcoin. But it's likely to be billions of dollars would flow in. And these ETFs are spot Bitcoin ETFs, as we mentioned. So it means it's going to be Bitcoin buying. Now, theoretically, it could be people taking Bitcoin they already own and putting it into this ETF, what have you. And it could be money flowing from other ETFs. A lot of money went from GBTC and Grayscale into Canadian ETFs from the US because they wanted more efficient products than what Grayscale was offering. So it could be that money just comes in from other jurisdictions and back to a US listed ETF. But theoretically, it should be buying pressure on Bitcoin. Now, how much of it, I don't know, and I don't really opine too much on that, but it would definitely be buying pressure on Bitcoin. The only downside to this is Grayscale would be able to convert GBTC to an ETF. And as I mentioned, the main problem with Grayscale and GBTC right now is they are not open for redemptions.
Right.
So you can't take that Bitcoin out. So theoretically, Grayscale would convert to an ETF at some point in the months following an approval, a theoretical approval. And that would mean that GBTC is subject to potential outflows. And GBTC is 630 some odd thousand Bitcoin in its trust right now, in its vault, if you think about it. So if that all of a sudden becomes subject to being withdrawn and sold, that's selling pressure. So there's both sides of this. It's not all 100% good for Bitcoin necessarily, but if people want to hold their Bitcoin and they don't sell it from GBTC getting opened, which is not guaranteed. But initially, at least, the iShares application and approval would mean buying of spot Bitcoin.
It's time for another quick break to hear these messages from my partners. Next up, I want to share with you about CrowdHealth, which is a Bitcoin alternative to health insurance. Health insurance costs are sky high today, and you send your money every month to a massive corporation, and then you never see that money again, even if you don't need a doctor. But if you do need care, you end up having to pay even more out of pocket, especially if you end up as one of the 20% of claims on average that aren't covered. CrowdHealth is all about community, and the community crowdfunds everyone's healthcare. So if something happens to you and you need medical care, CrowdHealth negotiates down the medical bill lower than what insurance would be, and then the community helps you cover it. And in turn, you help cover others' needs, which has been so rewarding. I am so glad I switched to this program. And for more information, you can head to joincrowdhealth.com/Natalie and use promo code Natalie for a discount. I am so excited to share that I have joined Orange Pill app as an advisor. If you haven't downloaded this app yet, you are missing out on connecting with Bitcoiners in your area. The Orange Pill app is building the social layer for Bitcoin and helping to create opportunities for in-person connections and community building. You can create a profile and you will see lots of familiar faces there. And then you can search for Bitcoiners or Bitcoin events based on your location. I am geotagged in my home base, St. Louis, and I'm super grateful because the Orange Pill app has helped connect me with Bitcoiners in my new city. So come join us, download the Orange Pill app, and head to theorangepillapp.com for more information. All right, back to the show. Wow, that is really fascinating. I didn't think about it in the opposite direction as well, because Bitcoin can obviously move up or down very, very quickly and very dramatically. So it will be interesting to see this play out. And a lot more companies obviously piling in. You tweeted about Valkyrie. I love their ticker symbol, Burr.
Yeah,
There should be an inverse, rugged, RUGD. No, but so do you see more companies kind of piling in so that in case this does get approved, they're not too behind on the wheel?
Yeah, so I actually wrote a research note like after BlackRock, we saw BlackRock's prospectus, and I hadn't yet seen that 19B4 filing. And one of the things I said in there, I said, expect a slew of issuers to file. And the issuers I listed were literally Valkyrie, Wisdom Tree, Invesco, Bitwise, and the only one that I listed that hasn't done it yet that I saw is Van Eck. So it's not surprising at all. There's been 20 something issuers that have applied. Some of them are no longer in existence. But there's going to be other issues filing because, like I said, if you're going to launch this thing, you need to either completely differentiate yourself some way, and even then, you're best off not being too far behind whenever the first one launches.
All right, James. Well, I know that a lot of us are excited to have a Bitcoiner in Bloomberg Intelligence doing this work for us. Tell us your Bitcoin Orange Pill journey. You've been in the space for a while.
Yeah, so I've been covering so personally, I've been invested and holding Bitcoin since 2016, late 2016, early 2017 is when I first got involved or first really started owning my own. I'm actually restricted from buying any now, so I'm
you
not allowed
are?
to buy. Yeah, I'm not allowed to buy anymore. So what I hold is what I hold. If I cover the space, so I'd have to leave and do something else or stop covering the space if I wanted to buy more. They
Wow.
changed the rules on me. But my first foray into Bitcoin was actually in the spring of 2011. I went to the college in New Jersey, and I had a suite mate. So not my roommate, but we shared some things with in the room. And he was big on Bitcoin. He was talking about it for a few days and convinced me and my roommate to download the Bitcoin mining software on our computers. So this is spring of 2011. So you can just get how cheap Bitcoin was.
Oh yeah.
Ultimately, that laptop blew up. The hard drive blew up on me. I remember I lost like a 12-page paper, and I was convinced it was the mining software that he put in my computer. So I swore it off from then on. And then I was at a traditional finance conference in Chicago, actually, in 2016, Morningstar conference. And Kathy Wood, who runs ARK Investment, was spewing Bitcoin's benefits, and she had a white paper there that she was sharing. And so I took the white paper, and that was when I really started going down the Bitcoin rabbit hole again as a professional, as somebody who understands finance a bit more than I did when I was a college freshman. So that's when I first. So basically, Kathy Wood orange pilled me is the real answer.
I love it.
Yeah.
Do you even know how much Bitcoin was mined on that computer? Did you guys get it off?
I didn't know what it was. I didn't even care. I just assumed it blew it up, and the hard drive was gone anyway. My hard drive was completely corrupted. I need to get a new laptop.
Wow. Well,
it might have been nothing. It might have had some Bitcoin on there. I will never know, but
or your suite mate made off with a ton of Bitcoin before that computer blew up. And now, do you still talk to him? No?
Yeah. So in 2017, when the bull market was raging, and I had just joined BI, and I was helping Mike McGlone, our commodity strategist, ramp up Bloomberg Intelligence coverage of cryptos. We were doing really basic stuff, just looking at technicals and price. So he basically was like, "Do you know anything about this?" So it's like, I actually do. So I helped bring him up to speed.
Wow.
And when things started getting crazy in late 2017, I reached out to my suite mate Mike, and I was like, "Hey, do you, like, with everything going on, do you still hold any of that Bitcoin you were mining when we were in college?" And never responded on LinkedIn. And then like a month later, his LinkedIn was completely deleted. So I don't know where he is today or how, if he has all that Bitcoin or he just doesn't want to talk about it. But again, we talked about this a little earlier. That's not KYC Bitcoin theoretically if he mined it way back then.
That's
So
right. He's
maybe he's
probably
on an
on some
island
yacht.
somewhere.
Yeah.
Yeah, he's on a yacht or an island
He's
somewhere.
probably on a yacht. Well, thank you so much, James. Really appreciate all of your insight. Any final takeaways or thoughts?
Yeah, I mean, my final thoughts are that like while me and my boss Eric Balchunas, we're relatively bullish on BlackRock getting approval because of who BlackRock is, some of the things we spoke about here. But still, you can't deny that the SEC has denied 33 of these things in the past, and they've been very aggressive in denying these things. The left wing of the Democratic Party, which is who Gary Gensler is tied in with, is anti-crypto for the most part. So there's a lot of things stacked against this approval happening, but we think there are also things that could happen. So if you talk to most people, they think the odds of getting approved are pretty low. We're higher, but higher still means like there's still a 50% chance in our view that this thing gets denied because of how negative Gary Gensler and the SEC has been towards crypto. So I know 50-50 is kind of like a cop out, but again, we're still way higher than a lot of people in my space who cover ETFs. So we're watching closely, looking for any other hints that we can find. But yeah, we're looking sometime in August is when we'll get some sort of insight, unless the SEC goes way early, like they kind of did with ARK. They went 14 days earlier than the deadline. So, but probably August is the time frame we'll be watching. And again, it's not guaranteed, but we don't think that it's impossible. And if you had asked us 3 months ago what the odds of a Bitcoin ETF approval is in 2023, we would have said, I think we literally said less than 5%. So
Yeah,
things have gone way up solely because it's BlackRock and who BlackRock is and what they mean
for
to the
sure.
industry.
For sure. Well, we will be watching. We know that you're staying on top of it. I'll have your Twitter and your work linked in the episode notes. And James, thank you so much again.
Yeah. Thank you, Natalie. Thanks for having me. It was fun.
Thank you so much for watching the video version of this show. I really want to hear from you. If you have suggestions or guest recommendations, you can email me at natalie@talkingbitcoin.com. Please subscribe if you want more content, and I'll see you next time.